Hello from Singapore. My name is Mercedes Rule, and I'm the Asia Tech correspondent for the Financial Times. Now, welcome to our virtual panel, or fireside chat, I should say, for the Deal Street Asia 2020 PE and VC Summit. Now, it's my great pleasure to welcome, I believe, correct me if I'm wrong, two first-time guests to this annual summit, Brian Gu of XPeng, sometimes known in China as Xiaopeng, and Jixun Fu, Managing Director of GGV. A VC that was an early backer of XPeng. And XPeng, for those who do not know, designs and manufactures what it calls internet cars, which has things like AI technology integrated into the vehicles. And today we're going to discuss the EV upstart's journey from idea to IPO this year, which has been quite a journey. And with that expert context and input from Jixun, who will speak about his bet not only on the company, but a little bit more broader take on EV, but also the VC space and what is changing in terms of deal making in the existing geopolitical context. Now let's get started. So it feels like not too long ago that electric cars and all their great promise, seemed quite far from reality. There was a moment about 5 years ago when I was in a small rural town in Australia known as Gundagai, and there was great excitement because this town of about 2,000 people was getting a Tesla charging station. And for me, that was kind of the moment that it became real. But, now seeing electric cars is electric vehicles is commonplace. Suddenly there is an EV IPO, what feels like every few months. And old guard vehicle makers are increasingly trying to get in on the action and catch up or keep up with a lot of these upstart tech companies. Tesla is set to join the S&P 500 index of leading US stocks next month. That's quite a moment. And the reason we're all interested in this, of course, is the car industry has been transformed by companies that didn't really exist in a matter of years ago. And this presents huge opportunity. Investors are buying into it in a big way. Just look at some of the share prices recently. Tesla, I mentioned earlier, $86 in January, now more than 400. And then, of course, the Chinese players. Some like NIO written off last year at some stage. I think it was at $3 at one stage. It's now over $45. WM Motor, that is mulling an IPO. Similar story of success for Li Auto. And all of these guys are being called the Tesla challengers. And into this mix comes XPeng, which had its debut earlier this year. And so, Brian, I'd love to start with you. XPeng surged in its debut in August. It's also well above its IPO price. But while valuations have soared in the last year, I'd love to hear from you, why you think that is, and fundamentally, what has changed that has caused this sudden kind of interest and enthusiasm for China EVs when, not too long ago it seemed like there were some doubts.
Yeah, well, first of all, very happy to be here joining this discussion. I think the question you posed is very interesting. We experienced what you call the up and down cycles in the last 3 years. I think when I looked at the industry beginning in 2018, it was pretty robust. A lot of companies financed and tried to be a successful startup, and then NIO obviously was doing well and raised a lot of capital then. But last year, obviously, you pointed out, we saw a slump. They're driven by a number of factors. I think, obviously, some of the promises did not hold. Even NIO, after the IPO, I think the delivery numbers start slipping compared to the forecast. And also the stock price, last year, both NIO and Tesla has suffered over the year. And that really drove, I think, the capital sort of away from the funding for EV startups. That period was quite tough, I would say, personally going through that. This year, I think there's a number of factors really changed. First of all, the pandemic, although caused a slump in the first quarter for the auto sales, but also we saw a dramatic rebound in the second and third quarter, both driven by the overall auto rebound, as well as much more significant EV auto rebound. If you look at the third quarter EV sales in China, it's 3 times the sales of the first quarter, which is dramatic. And also what's driving that EV rebound is actually the a group of what we call smart EV players. Obviously, Tesla being one of the dominant players providing smart EV like Model 3 made in China has done extremely well. But a company like XPeng, like NIO and Li Auto will have products that's designed with smart features, consumer-friendly, appealing designs, has received very well. So that is driving the phenomena of the rebound. And because of that, I think capital start to recognize the momentum. If you look at the penetration rate of EV, overall, it's still quite low in China, right? We're still below 5%. Even in third quarter, when we saw the rebound, it's about 4.5% for EV penetration. But if you look at the large cities like Shanghai, like Beijing, like Guangzhou and Shenzhen, some of those cities, the penetration rate is already approaching 10%, which means that there's a strong consumer adoption going on. And that is what I see as a tipping point of EV product. Because when you actually have your friends, your family driving EV on the road, I think everyone will start notice and they get used to, they get comfortable with charging, they get comfortable with driving a different product that does not require you to touch the button and dials. You start talking to them. That whole experience change really gonna, I think, driving the behavior. So I think this year, it is actually the beginning of what I call the inflection point. And I think that the momentum from what we see today is actually continuing for this market and sales.
Thank you. Just a quick follow-up question though. I mean, a lot of these companies are still cash burning quite a lot. Is it that the market is not as concerned about this, or does that still matter quite a lot?
Well, I think the profitability is also a matrix people have looked at. But in the context growth, I think people know that you have to invest heavily up front to really enjoy the growth advantages, which similarly we saw companies like Amazon and others have done the same, right? To even for Didi and Alibaba, etc. But on the other hand, if you look at the most recent quarter, we announced our earnings about a week ago. NIO, Li Auto all announced. You can see a dramatic pickup in profitability on these products as well. Our margins has turned positive for the first time in the third quarter, and I think it's going to continue to improve, particularly with some of the software income that's coming on board early next year. NIO and Li Auto also show very healthy gross margins. So you can see that these attractive products, not only they're selling well, but they also become more profitable. And that is a trend also recognized by the investor community.
No, that's a very good point. And certainly, Tesla has paved the way in that regard in terms of profitability. Jishan, I mean, do you agree with that in terms of, and there's less concerns about that? And to what extent is there, do you think, a Tesla halo effect going on for these Chinese electric vehicle makers? Are the prices you're seeing justified?
Well, I think certainly there is a path that Tesla has painted for the emerging EV players like XPeng, NIO, and Li Auto, etc. So it painted a path and a transitional sort of a momentum that is being seen in the market. I think that momentum is actually accelerating, as what Brian has just said, is we are seeing this accelerating momentum in the market. And that momentum is not just by the consumer behavior, the consumer adoption, the consumer gradually become a consumer of demand. It's also supported by various policies from the Chinese government. More recently, in fact, the Chinese government is trying to promote this transition to electric power vehicles. And so we are seeing that momentum. And therefore, I think the demand is picking up. And as a result, I think at the end of the day, we also look at this from an investor point of view. We also understand that this is a scale game, right? Yes, the gross margin was low or negative as they started off building out and rolling out those vehicles. But as the scale gets bigger, there's an economy of scale, and we do see margin improvement. And that math can be shown. And that's what investors are looking at, and looking at how the margin improvement will get over time as they get up to scale. Most of these EV players are doing, 2,000, 3,000, 4,000 a month. And we do anticipate that with scale, there is a greater margin improvement, and therefore there's a path towards profitability. That's the excitement. I think many investors are just not looking at what it is today, but looking at where can these companies be a year or two down the
road. Okay. And I mean, what about the broader market in China? I mean, I'd like to talk about, this was certainly, and Brian mentioned this earlier, certainly a country that bounced back after the virus struck the fundraising industry. Struck the country, but also by extension fundraising. Can I get a sense more broadly on EVs, but also about the Chinese market at the moment? How you feel and how VCs feel about valuations, round sizes, and how they stack up against the prospect of exits and profitability right now?
Well, I'll tell you this: I've never been that so busy. When I first came back to China, came back to Shanghai in middle of March, just right at the tail end, at least for China, the sort of a pandemic, and we saw the recovery in China. That was a very moment, and so came back, and for a period of 2-3 months, you see everywhere else there was a breakout in COVID. The pandemic spread across the world, and we saw this whole market downturn, right? Financial market was hit very badly. Until the liquidity kind of got pumped in, a couple of $1 trillion from the various governments. And so that really, we start to see that turn around towards the end of Q2 or middle of Q2. But having said that, I would say that Q2 generally has been slow. But starting summer through fall, we are seeing this build up momentum. And that's one, because there is a greater momentum behind technology adoption, because everything is going online. E-commerce penetration is accelerating. We are seeing more behavioral online as enterprise adopt more online services, online solution as we all go on Zoom, etc. So this build up momentum also build up the investment momentum here in China. So that is coupled with the capital markets, the valuation that's being rewarded with the capital markets, the momentum in the capital markets that also adds to the excitement on the ground. So I think I would say the last couple of months momentum has been pretty strong in terms of investment on technology. There is an underlying drive though. I think where GGB is investing heavily into is where that involves technology. So AI, 5G, and robots. To be fair, the car is a robot. XPeng is a robot, and it's AI powered. It is today L3 enabled in terms of its autonomous capability, and it's going further. So that's where investors are putting their heads at, as this whole technology powered transformation, and that's where a lot of capital has been poured.
Is it too much capital though? I mean, there's a lot of excitement about companies and startups that have benefited or are riding the COVID online wave. I mean, how frothy are things looking? And for instance, in terms of valuations, you think for companies like e-commerce, ed tech, that sort of thing?
I think there's a certain level of frothiness. I don't discount that. I think there will be, so we have to be selective. At the end of the day, we're looking at long term, right? The valuations for some of these companies could go up, could come down. For one, I'm pretty bullish about, XPeng long term. There may be volatility in the stock price for various reasons. But if you look at the long term, is this on the right trend? Is this on the right path? We believe so. And that's where we are. We are trying to identify companies that can go long. The near-term volatility, for sure, there will be near-term volatility.
Speaking of stock markets and volatility, Brian, your rival WM Motor is reportedly mulling a stock market listing on the Shanghai Star Board. Whether or not that happens, I'm interested in why more Chinese EVs aren't listing in the mainland and why they continue to gravitate towards the US.
Well, I think there are a number of factors drive companies' decision to list in certain venues. First of all, you have to be structurally available to list in those venues. We were reorganized and incorporated in Cayman. That gave us the ability to tap US listing, whereas I think some other players are domestically structured, so they probably will be a little bit more cumbersome to look at US listing versus domestic listing. Similarly, for us to list in China, we may have to also reorganize a little bit to satisfy them. So structurally, there'd be a difference. Secondly is I think also the equity story will be quite different. If you look at the equity story that's well received by investors globally, we'll be focused on the technology, we'll be focused on the autonomous driving, the differentiation, the capabilities, and have the long-term vision to execute in that front. I think domestic investors probably tend to focus on near-term matrices, for example, volume, for example, traditional auto experiences. So some of the startups with that characteristics probably are more suited for domestic listing than overseas listing. And then for us, another consideration is that we think the window of opportunity is quite important given the market. So for us to complete an offering, I think US has probably the fastest and the most efficient execution. So that's why we embarked on that process. As you know, Chinese listing has certain regulatory requirement hurdles. It may take a little longer for us to be prepared. So we think combine all these factors, US listing is appropriate for us, but maybe a different answer for other companies.
And did threats by the US administration about restricting or kind of putting, I guess, Chinese listed companies in the US under the microscope and potentially disallowing that? I mean, did that have any bearing on your decision to list in the US?
That's definitely one of the risks that we looked into. It's faced by all the US listed Chinese companies, including all these new ones that went to US this year. I think the more we looked into that issue, the more we felt it will be dealt with, by the governments. It's not going to have a near-term impact for listed companies, and also I think for the sake of the investors and long-term capital markets stability, I think there is an incentive for the governments to work on a solution, which we are seeing some progress on that. Obviously, some of the proposals put forward making it a lot more, I would say, executable for companies to satisfy some of the requirements. So I think we are hopeful that there's, solution ultimately. So it's not impacting investor sentiment at the time of IPO. And in the long run, if this risk persists, we always have alternatives as a company, right? And we looked at a lot of the secondary listing done by Chinese listed ADRs already. That was also done very successfully for Alibaba, JD, NetEase, and others. So I think we always have measures that we could use to counter some of these potential risks in the U.S. market.
Would a secondary listing be a countermeasure for you, or is that something you actually are interested in long term anyways?
Well, I think you correctly point out. I mean, having access to Asian capital markets as well as capital markets that connects with a share domestic Chinese investors are long term, I think, important and attractive for us. So those are things that we definitely will look into as a company.
Jishin, what do you see in terms of the IPO pipeline next year? Is there anything you're watching? And does the prospect of a Biden presidency, do you think, change somehow some Chinese startups are feeling about listing in the US in terms of being more, I guess, proactively looking at that now?
Yeah, we do have a pretty strong healthy pipeline of companies, both in the US and in China. In the US, we have a couple of companies that are seeking to go public pretty soon. They're kind of in the quiet period. And for China, we have companies like Manbang, Bosch Shipping, Keyday, Joyabang, etc. They are in different verticals. They have had a pretty strong momentum in terms of their business and a recent fundraise. So I think these companies are ready to go. Obviously, there's a preparation process. Assuming the capital markets remain open, assuming the regulation doesn't change too much overnight, we do anticipate the market to have a few more companies go out next year. So that remains a pretty positive thing for us.
So, I mean, one of the other interesting trends that I'm always following is how Chinese brands are received with overseas consumers and vice versa. And there was an article, I think it was this week or last week, in our sister publication, Nikkei Asia, about Chinese consumers' preference for foreign brands over local ones and how that figure is growing. I mean, to what extent do you think the EV industry can turn that trend around?
Yeah, I think it's interesting. In auto, foreign brands commands a huge premium, right? I mean, the BBA, and also some of the luxury brands are all, I would say, international brands. But somehow EV or smart EV as a category, people are not as brand conscious. Clearly, Tesla has a strong brand. It has developed over the years. But the EVs introduced by the traditional auto companies like the BBA, they are not selling that well in China. And I think people recognize it requires a different kind of product to compete. Not all the large and leading brands will actually be able to offer those technology and differentiation. Increasingly, I think the domestic company products, and obviously we focus on different segments. They are actually getting recognition from consumer as superior in terms of quality, functionality, and smart capabilities compared to those international products. So I think it is actually less a foreign brand conscious as a product category. But I think in other more traditional areas like apparel, like traditional auto, I think the foreign brands still commands a significant premium.
Let me flip that around. I mean, XPeng exported its first batch of vehicles to Europe, to Norway, or is in the process of. Can you tell me a bit about your market research on Europe and what the differences are with Chinese consumers? And second to that, why go EU first over the US?
Well, international strategy to us is a very important but a very long-term strategy. If you look at Europe this year, with all the policy in place, with the consumer adoption rate very high, certainly, especially in Northern Europe, it's actually becoming probably a much more attractive market. It's probably going to be larger than China by the end of this year. So there's a potential to be one of the largest market in the world. So I think that's one of the reasons. It has a very high penetration rate already, particularly in Norway, for example. More than 50% of the new car sales are EVs. It has a well-established infrastructure, charging support. It has consumer preferences. So I think it is a good market to enter for EV companies like ourselves. And we also compared our products like T3 and T7, those two products, to what's available on the market today in Europe. And we feel like our products are actually very competitive from design, from range, from smart capabilities. I think it will bring a very interesting alternative for European customers. Clearly, we are still very young as a company, so the European strategy is still, I would say, at the exploration stage. We're shipping the first batch to our distributors in Norway. We're supplying them with sales and services and technology support. But I think for real development onshore in Europe, it will take time. We need to invest in brand, invest in our network, also capability to be able to run a business in Europe. That I think it will take much longer time to prepare. But we're very hopeful because ultimately we feel like EV or smart EV is actually a global product. It's not something just only designed for China. And I think with our advantages in software and hardware design, I think we can offer a compelling proposition to the global customers.
How big is the team in the EU, and do you have any projections for what it will contribute to your sales in 5 years, say?
Well, we don't have any KPI for our European business at the moment. We were just starting forming a team. So it's all very early for us, but I think over the next 5 years, I think we hope this has become a more substantial piece of our business.
So I'd like to talk a moment about manufacturing. Now that staying on the topic of foreign, there's this great shift going on in the supply chain, especially with manufacturing out of China. Is this shift overblown a bit? China's still the world's biggest market. Just look at EVs. What are you seeing your portfolio companies do, and do you have any examples?
Well, I think that the supply chain is reconstructing as we speak, and there are a few factors affecting the reconstruction of the supply chain. One, obviously, there's this geopolitical backdrop, and that's forcing parts of the reconstruction. But there's also a cost structure advantage that some of the other emerging economies like Vietnam is having, or Indonesia is having. So, because China has come to a point where cost of labor has come up quite a lot in the last 10, 20 years. And so there's a lot of automation going on. And so that cost arbitrage equation will continue to shift. It shifted to the advantage of China earlier in the last 10, 20 years ago, and now it's kind of rebalancing itself. So that's happening anyway. So I think the reconstruction of the supply chain is happening as we speak. But you are also right. I think we have to look at this as an ecosystem. It's not that easy to just, migrate things out of China. I don't see that happening. I think that will be pockets of the supply chain that moves out for various reasons, like I discussed. And a big part of the supply chain will still stay in China. And I think that's one advantage that China really has, is this, it's not just about the software aspect, the AI aspect that China has built, but also the whole supply chain aspect, where a lot of new hardware integrated products can be, innovative products can be tested and integrated very, very quickly. So the iteration process of a lot of the hardware product innovation is very fast in China. And that's one of the advantages that China has. Beyond XPeng, we talk about NIO and Li Auto, the automakers. If you look at drones, China has also been one of the largest, DJI has emerged as one of the leading players in drones. There's also robots for warehousing, robots for restaurants and hotels. And these robotics innovation, I'm going to see more out of China. So that's the innovation drive, and that's the ecosystem advantage that China has, will continue to have for a while.
Yes, I agree. I mean, and also just, you're talking lead times of hours versus weeks for places in Southeast Asia. But you just mentioned some interesting products. Brian, I'm interested in the flying vehicle prototype that you guys unveiled. I think it was this year. How are you going to incorporate that into your product suite? I mean, what hopes do you have for this product?
Yeah, so we unveiled at the Beijing Auto Show that we recently XPeng, as well as the founder Xiaopeng himself, jointly invested into a new company. We should take control of that company that develops flying vehicles. It is still early. They have the first generation product, which I wrote in as well. Very fascinating. It takes you on a low altitude flying, which can go up, 50 to 100 kilometers in range per charge, all electric. And I think, clearly this is potentially a trend for future mobility, because think about, there are scenarios that you probably will enjoy flying directly without going through the traffic and also, the obstacles. But this development also requires development in Chinese regulatory environment, right? I mean, currently there is no clear regulation that allows commercial flying with sort of flying cars. But I think there is also strong incentive for the government to develop what they call low altitude economy, because China is really underdeveloped in that area. And I recently talked to experts in those fields, and they all tell me that both the government and including the military, which is responsible for airspace, are now willing to explore ways to liberalize the low altitude flying space, which I think will offer significant imagination for people who think about future mobility. So in XPeng, we believe that the software, the hardware that we come up for our products, especially in our vehicles, can be utilized and leveraged for other modes of transportation, right? So, for example, the electric, the battery-powered motors, the autonomous driving sensors, the algorithm, the controls, all those can be included in the design for the flying vehicles as well. So there's a lot of synergies. And also, we think in the future, people will have to explore different ways of mobility. And I think having this flying car as a potential alternative will be a more fulsome solution to solving the people's mobility needs in the future. This is still very early in terms of product exploration and design for us. We hope that we can come up with second, third generation products that's more and more suited for commercial use. But stay tuned. There will be a very exciting development in that area.
Wow, I wait with bated breath. Jishin, so what autonomous driving use cases do you think have the most immediate potential to monetize? What are you seeing?
Well, I think the autonomous driving, it's a iterative process as we go from L3 to L4 to L5. And I think the whole experience will, I think in a city like Shanghai or a city like Shenzhen, Guangzhou, you're going to have this sort of a semi-autonomous experience. Perhaps the parking of the car is fully autonomous, and if you're stuck in the traffic, the whole moving the car from along the highway is autonomous. But there's still a lot of interaction with human, with the user at the driver's seat. So that's the kind of anticipation, I think, in the next 2, 3, 4 years. I think that's the kind of experience. I think you will see robotaxi. You will see in more confined zones like campuses, in industrial parks. That's where there's a possibility for more full autonomous experience where robotaxis can be moving around. So I think in the next couple of years, you're going to see iteration of these innovation moving in that direction. And this is a combination of iteration in the technology, hardware, the cameras, the computational power, everything that moves and drives towards a more fully autonomous experience. And I think that's the evolution that we're going to observe over time.
Yeah, thank you. That definitely, I would agree with that summation. Brian, I wonder, just kind of keep staying on the tech, what does the kind of entry of companies like Huawei as a mobility software provider mean for EV startups like yourself, who are attempting to differentiate yourselves as, a smart option, internet option? How worried are you about that?
Well, I think Huawei will be a formidable player in the smart solutions. I mean, we don't know whether they will be doing vehicle manufacturing themselves, but at least they're trying to providing a holistic solution to automobile manufacturers to provide smart capabilities, which we design. It is something that we're closely watching. I think Huawei historically had a very strong execution capability and can be a very successful in their product launches and executions. But I think Huawei will approach the market from a different perspective. I mean, currently they try to work with as many OEM players as possible to be a tier one solution provider, which will be different from what we're doing currently. We design our own cars, we sell directly to our customers. So in that regard, they will potentially be a partner for us, supplying certain hardware as well as software technologies. But in the long run, if Huawei does get into vehicles, I think they will also adopt a different strategy compared to existing players. Just look at how they competed in the smartphone segment. They obviously carved out a segment pretty niche to itself. It has shown, and they're trying to be between Apple and Xiaomi, and Huawei is somehow in the middle. So I think they are trying to find a segment that's suitable for them, trying to stay away from some of the competitions that we all focus on. So we believe that Huawei will be a strong technology player. Also, it potentially could be a potential competitor, but also potential collaborator for us. In the long run, I think the market is big enough to coexist a number of large players, just like the smartphone market has saw the existence of a few very successful Chinese players as well.
Mm-hmm. I mean, very good point. I mean, who do you see as being the more formidable challenger to you? Something like, is it Didi, Meituan, Alibaba, Huawei, or is it VW, GM, Toyota over the next decade?
Well, a lot of those names are competitors already, and they could be competitors in the long run. We saw Didi announcing a venture with BYD, but I doubt Didi will go into vehicle manufacturing. They probably still want to stick with their platform for mobility operations. But obviously, they are providing support for one of our potential competitors or competitor like BYD. But I think as we grow and develop, our competitor landscape changes pretty dramatically, right? I mean, we are first faced with people questioning our survivability as a EV player, so we need to stand out with a good product. Then people worry about your volume projections, which we need to demonstrate that we can actually hit the volume targets and grow. And then in the long run, people will say, okay, what's your differentiation on technology, autonomous driving, and that put us against the Tesla and potentially Huawei and others. So I think along the way, we'll face stronger, more formidable competitors, but that's how a company grows. So I'm not too worried. And I think it'd be making this whole journey more enjoyable, having different and more formidable players to compete with.
Excellent. That's the spirit. Jishin, I'd love your view on that, but I guess, I'd like to finish with you on, Brian's just spoke about the immense change we've seen in just a short amount of time. I mean, what is the kind of EV car market, what's its significance and AV, I should say, over the next decade? How would you sum up the era ahead of us?
Yeah. So I think we are the way I would characterize this is that we are entering a new era of, call it the internet cars or smart cars. I think over the past few decades, I think the way we view cars is, from the very traditional gasoline, diesel to gasoline to electric. And a lot of it is just in the whole power system, how the power system has transitioned. But really, longer term, we are talking about smart cars. And I think we are just at the beginning of a smart car evolution. It's almost having, iPhone 1. And it's right at the beginning of what a smartphone could look like. And you can never imagine how powerful a phone is today. And just as I would think that 5 years down the road, 10 years down the road, a smart car is much more than what it is today. It's not just in the power system, the driving experience, but it is in the whole user interface as well. So there's a lot more to come. And I think we are in a new era of smart car evolution.
Yes, I remember my first iPhone. It feels archaic now when I think about it,
right.
How it looked. A very good point. I like that iPhone 1. I guess I just finished by then saying, how do you expect regulation to keep up with this era? You've seen a lot of regulatory change in China just this past week in terms of the antitrust draft legislation. Brian mentioned earlier, there's kind of no regulation for flying vehicles. I guess, governments struggle globally to stay ahead of the regulatory curve. What would you both like to see in the coming years?
I think I think most government will look at how they could embrace change and embrace innovation. And obviously in the effort to protect the society, protect the interests of the broader society. And so a regulation has to evolve over time to allow more autonomous sort of experience in a car. So regulation has to adapt and change over time. And that's always challenging. That's not always easy. So we'll see iteration of these changes over time as the government and the society kind of grapple with the change that they are seeing in place. At the end of the day, we are looking at a more efficient environment, a more efficient experience and drive experience for the consumers. And so I do believe that the governments around the world, and not just in China, will embrace such a change.
Brian, do you agree with that?
Yeah, I agree that I think Chinese government is probably one of the most pro-economy government in the world. They focus on trying to make sure there's sufficient growth and development. So we're hopeful that that attitude that policy will continue. But on the other hand, I think Chinese government also is very focused on making sure there's harmony, right? There's the stability. So which means that some of the technology, although encouraged by the government, but may have to start with very conservative settings. For example, autonomous driving. I think the tolerance for risk is probably a little low for Chinese government compared to US or other companies. So I think balancing those two will be important for a company to navigate through the maze.
Well, I wish you good luck with that maze. And I would love to thank both of you for, terrific comments. I got so much out of this, and I hope that our viewers do as well. Looking forward to the iPhone 1 era ahead, and 2, 3, 4, 5, 6. What are we up to? 10 now. So thank you very much for your time. And, thank you everyone at Deal Street Asia for making this panel happen today.
Thank you.
Thanks very much.
Bye.